The contenders, leadership and incentives start with the brains of the fighters. Every great champion starts with leadership, and Howmet Aerospace, HWM, is no exception. CEO John Plant and CFO Ken Giacobbe are the ones in the corner calling the shots. Their team is their compensation isn't a paycheck for showing up. It's tied to performance, growth, and shareholder value. That's clarity. That's discipline. Think about what that means in the fight. These are leaders who have won countless rounds before. They don't step into the ring unprepared. They train, they plan, they fight with purpose. Compare that to the companies where leadership just collects checks regardless of performance. That's like sending a fighter into the ring who hasn't even sparred. No urgency, no edge. With HWM, leadership is aligned with shareholders. Dividends raised, earnings delivered, buybacks executed. That's proof the brain of the fighter is sharp. And it's not just HWM, CTAS, PLTR, NVDA, Google, BRKB. They all have the leadership mindset, the kind of corner men and trainers who know how to win fights, not just show up. These are champions in their own right, and champions are built from the brain down.
Identity and company role. Now let's look at who they are in the ring. HWM doesn't build the plane, it builds the parts that make the plane fly. Titanium fasteners, jet components, precision systems. This isn't filler work. At 25,000 feet, failure is not an option. That's why HWM isn't a seasonal trade, it's a structural foundation. This is what makes them durable. Boeing, Airbus, Lockheed, all of them depend on Howmet. Without HWM's work, fleets don't fly, fighters don't launch, defense systems don't function. That's not hype, that's backbone. The same goes for CTAS, supplying the essential services that business cycles can't skip. PLTR, embedded in government and enterprise systems. NVDA, running the chips that power AI. Google, the gateway to the world's information. BRKB, the ballast of financial stability. These aren't lightweights. These are heavyweight fighters, battle-tested, experienced, built to go the distance.
Chart and market climate. Now the fight is going into overdrive, and who will be the last man standing? Look at the charts. HWM with a 40% gain over 6 months. NVDA powering AI. PLTR building momentum. BRKB steady as ever. Google grinding higher. On paper, they look untouchable. But here's where the climate shifts. Tariffs aren't an instant knockout. They're body shots that build damage over time. And the time is now starting to show. Wars add uncertainty, draining stamina, job losses creep in, shaking confidence. And the Fed cutting rates? That's the referee quietly telling you the fight is heating up and somebody is about to fall. They don't cut when everything is fine. This is the moment history warns us about. The second half of the year, when Tyson steps into the ring. The Tyson I'm talking about is all the above. The first half felt like sparring match. The second half is where the champ shows up, gloves high, ready to hit. The punches don't look big on the outside, but when they land, the whole system staggers. So yes, the chart said things are changing, and the climate says storm, and everybody here is taking hits. HWM seems to be getting off the mat. Google seems to be still going the for win. But when Tyson walks in, even the best fighters start to wobble. And tariffs, wars, job cuts, and now the Fed cutting, the writing is on the wall.
Sector and peer context. Think about all the fighters in this focus. CTAS, one of the most consistent names in services. BRKB, the compass for long-term investors. NVDA, the AI darling, hitting new heights. PLTR, government contracts stacked. Google, information backbone. HWM, aerospace anchor. Normally, these are the ones you count on. But this year, the signs are different. CTAS stumbling. BRKB fighting to go higher. NVDA falling after its great run. The point isn't that these companies are weak. The point is that even the strongest champions can get hit. That's the Tyson effect. Tyson doesn't care if you're undefeated, if your corner is smart, if your record is clean. He walks in, and suddenly the fight is different. One punch, and everything changes. And when the entire peer group, the strongest of the strong, starts showing cracks, it's not about the fighters anymore. It's about the heat of the ring. This second half, the champ, is the market dynamics. and nobody fights them forever without getting bruised.
Recap and lesson. Here's the takeaway. HWM is a pillar. So are CTAS, PLTR, Google, NVDA, and BRKB. By fundamentals, by leadership, by charts, they all look like fighters ready to win. They have the tools, the leadership, the staying power, everything it takes to be a champ. But times are changing, and when you're watching from the outside, the punches don't look like much. You think, they can take that. When you're the one in the ring, the world changes. One punch and the legs stop working. The brain short circuits. The eyes blur. Shots that look like taps from the seats feel like thunder on the canvas. That's the difference between theory and reality. In the second half of the year, tariffs is reality. They start to hit hard and they start to hurt. October will be when they step into the market ring, and this year the fight is stacked. Tariffs, wars, job losses, Fed rate cuts. This is not a soft spar anymore. That's the champ looking to end it quick. Here's the brutal choice. Walk away early or get carried out. If you're lucky enough to still have profit, take it. Symbols are starting to get black eyes, and round 1 is over. Round 2 is all or nothing. Tyson doesn't like going the distance. That means you either knock him out fast or he knocks you out. The market is no different. What looks like a dip now can turn into an all-out fall at any time. The tariffs has now been paid, and the charge is trickling through the market. October will show the real pain. Strategy, survival, watch the 10-day lines, take your gains, step out before the knockout punch. That's the lesson of experience. We've taken those hits before. We've been bloodied in this fight during the last 30 years. We know the pain, and pain is a teacher you don't forget. You forget the happy runs, you never forget the knockouts. This time, we're taking profits. If the tariffs fade, that's the positive indicator. But if you know like I know, most prices always go up and almost never come down. The prices from tariffs are knockout punches. They are here to stay. The price has been paid and you can't get that money back. Reality check before we sign off. If you found the breakdown useful, hit like, subscribe, and tap the bell so you don't miss the next market brief. All charts and numbers came from public data. Everything was crunched in-house. This content is for education and discussion, not a signal to buy or sell. Markets carry real risk. Money can and does go south. I trade my own account and may be long, short, or flat any name we mention. Double check the facts and talk with a licensed pro before acting on anything here.